Hello trade pros and welcome to this weekend's video. This is Mark from TRADEPRO Academy, and this weekend we are going to discuss how to filter out trade setups using multiple time frame analysis. Now, before we get into the actual clips, if this is your first time watching, welcome. If you're a returning viewer, thanks for coming back. If this is your first time here, what we ask of you is to kindly go ahead and hit that subscribe button and make sure to check off that notification bell to get notified anytime that we do go live or anytime we drop any new content. In addition to that, please make sure to smash that like button. That really helps us out with the YouTube algorithm, and we also really appreciate that. So thank you. Now, we've got that covered. Let's go ahead and dive into this presentation. All right, trade pros. So what you guys see in front of you at the moment is a daily chart of the USD Canadian dollar pair. And what we're going to discuss in here is how to use multiple time frames to filter out the lower quality setups. And what you guys see on your screen in front of you here is two setups that we've identified that were potentially valid setups off of first look. But when you look into it a little bit deeper, utilizing the lower time frames, you can see that one of these opportunities was actually a valid setup and the other one was not a valid setup. All right, and so the two opportunities that we've identified for you here on this chart is this little engulfing candle pattern right down here and this other engulfing pattern right up there. And now, before we get into the actual specific tips on how to identify when a trade is more probable than not, what we're going to do quickly is discuss multiple time frame analysis. So if you're not familiar with multiple time frame analysis and what it is, please make sure to check out our video on our channel here. It's going to show up in the top right corner before proceeding. If, however, you are already familiar with multi-time frame analysis, let's proceed with this example. So anytime you get a reversal pattern on a higher time frame chart, what you want to see is that the lower time frames actually suggest the same thing. So if you're seeing a bullish reversal pattern, what you will want to see on the lower time frames is for market structure to align with the higher time frame reversal. Similarly, if you're seeing a bearish reversal candlestick, what you want to see on the lower time frames is that market structure and price action is confirming the same. And I'm going to show you guys how to do that in just a moment. So as mentioned, you've got two opportunities here, and this is your daily time frame. Now, when we jump onto the intraday time frame, the 1 hour time frame in just a moment, I'm going to explain to you guys exactly what you should be looking for in order to filter out the setups that have a higher likelihood of working out versus those that don't have such a high rate of success. So first and foremost, what we're going to look at here on the daily chart is the fact that on this first setup right over here, you can see that we had a little bit of selling pressure before we had that little reversal. So we had a drop, we had a base, and then we had another rally lower. And so this right here was a supply zone. This is a supply zone where you would anticipate some selling to come in. Okay, and what we can see here is as the selling came down, we started to slow down a little bit. You can see these last 4 days before that reversal is a lot of consolidation. We're pretty much trading sideways. All right, and now when you get a reversal candle like that, what you want to see on the intraday time frame is that market structure shifts to the upside. That's going to help you confirm the lower time frames are aligning with the higher time frame idea, and this is what's going to give you a higher likelihood of success. All right, so the first potential trade was right here, and the second potential trade was right up there. Now, as you can see based on this chart, obviously one of them worked and one of them didn't, but the reasons why is exactly what we're going to discuss. So when you see a reversal candlestick pattern like these, they can look good, but you can always go one step further to kind of filter out whether the setup is really a high quality setup or whether it's a lesser quality setup that should be passed. And let's take a look at the intraday time frame now. All right, so what I've gone ahead and done on the intraday time frame here is I've basically highlighted the 1 hour, the 24-hour session rather, based on the 1 hour time frame. So on that daily chart where you saw that big bullish engulfing candle, this price action within these two confines is the price action for that day. Similarly, you see the same thing here. The price action where we had that big reversal candle, this is the price action that took place within that single day. All right, so each one of these bars is worth 1 hour of price action. There's 24 of them, which gives us 1 full day. Now, looking at this, what you can see is that we had a previous swing high that I've identified here. And on that breakout, you can see that the daily engulfing candle was obviously a bullish reversal pattern. And on the intraday time frame, what you're seeing here is we did get a break of market structure. We broke a previous market structure swing high, which gave us a new higher high. All right, and on that higher high, we had a nice clean breakout of that previous swing high, and you can see here there was some conviction on the upside. Once you get a strong breakout and close above the previous swing high on the intraday time frame that aligns with the bullish reversal pattern on the daily time frame, that stacks the odds more in your favor for the likelihood of the trade to work out. And as you can see here, we got a little bit of a pullback during the London session or so, right into test that previous resistance as support, and bam, off went the market. Now you can see here on the opposite end, we had a little bit of selling coming into the market. So while we did have a nice move higher, you can see that there was a nice big wick right here showing that selling pressure was coming into that market. All right, and we came down into this level, formed a nice little swing low right here, and then you can see we had a little bit of action. A move to the upside ultimately failed, making a potential lower high here, which is showing that bears might be coming back into this market. However, where you look at the close of that candle, the close of that candle did not break out below that previous swing low. And as such, we did not have the market structure break that we clearly saw in that first example. So because we did not get that market structure break with conviction, as you guys can see here, these bullish candles have some conviction behind them when you compare them to these red candles within this zone. All right. Whereas here, as you come into that breakout level, there's not much conviction to the downside here. And the fact that we could not break market structure on that reversal candle, on that daily reversal candle, that disqualifies this as a high probability setup. Whereas this long trade here, this was a high quality setup. Why is that? Because we had a bullish reversal candle, as you guys will see here, bullish reversal candle on the daily, and then our intraday time frame also confirmed that in the sense that we had the market structure break with conviction. Whereas if you take a look back at this bear candle here, you guys can see we did come from bearish price action, rotated up, and so that was a pretty valid setup. I know a lot of pullback traders would have been looking for that setup. We were too, but we did not get that market structure break. Okay, and so you guys can see here, why did one of them work when the other one did not? Can't say it's exactly because there was no market structure break, but that is the qualifier, one of the qualifiers that we use to spot the higher quality setups versus the lower quality setups. So I hope that you guys enjoyed this one and you're going to apply them in your trading going forward, and I'm excited to hear how that goes for you. Please do let me know if you're going to implement this in the comment section and offer some feedback. How's it going for you? So with that being said, guys, if you haven't had a chance yet, please go ahead and smash that like button. Also, if you haven't subscribed, there's no better time than now. Please go ahead and hit that notification bell to get notified anytime we go live or anytime we drop any new content. With that being said, guys, I hope you enjoyed this one. Until next time, good luck and good trading. Take care.